Hello everyone, this is Mr. Joza here, and welcome back to my Bitcoin Lookahead series. Thank you very much to my follower who remains anonymous for the one Bitcoin donation. That is huge. I honestly thought it was a mistype on your part. But your support helps keep my channel running as I don't monetize my videos. With all the current YouTube and AdSense fuckery going on at the moment, you guys really help to keep us to the Bitcoin space, so thank you very much again. Now, speaking of the Bitcoin space, we just broke down through a technical analysis triangle which can be drawn all the way back to early February, but we didn't dump. Indeed, we've rose back to the horizontal support of $445 and we're currently retesting the $450. After the price broke over at $470, we've seen the price range between roughly $20 bounds from $435 to $455 with support roughly centrally. This was tagged a good 6 or 7 times, so it's very easy to identify. Now, as I mentioned before, the price broke over the secondary bull trend here, which we can follow all the way back to early February. So, to re-enter this secondary bull trend here, we need to buy up another $6, which would take us roughly to the top of the OBV triangle. On the other hand, if the price were to break down from here, and we break this $428 to $430 level, we could go back to horizontal support all the way back at $420. Seemingly a magnet for Bitcoiners for some reason. Let's take a look at the Bollinger Bands real quick. On the blue bands, these are the 4-hour bands, we observe a lot of consolidation near the horizontal support of $440, but only very moderate expansion when we broke out above it. See, this is likely due to the slow buy Bitcoin standard retracement. So we're probably going to consolidate up or down to find more buying pressure before we have a proper breakout, but this is only in the 4-hour bands. On the white bands and the yellow bands, yellow being the daily, white being weekly, we do still see a lot of compression. You see, the white bands, being the weekly bands, have only really been this compressed since it ranged between $200 and $300 for about a full year, before having this large breakup. Now hopefully this is the case again with the halving coming. But on the daily bands, it's almost the same story. While not quite as tight as we've seen in April, we do have a lot of consolidation still. Like I said before, there's still only very minor expansion in the bands, so we're looking for more consolidation in this area between 435 to 465 before we're looking for a proper breakout. Hopefully the up direction, right? So, even though we've observed some expansion on the weekly Bollinger Bands, we're still well above the median. Well, there's a couple reasons for this. The DAO, or the Digital Autonomous Organization, so far the highest financial backing crowdfunding effort in the world. It also just happens to translate to the way. Now, after they opened the doors for funding at the beginning of May, it snapped the Ethereum price back from where it retraced to at $7.36 all the way up to $14.75, almost exactly double the price. Now, you can't really be that surprised with $149 million worth of venture capital being poured in though. But with any dramatic price increase, there's going to be some urgency to take profit on all those Ethereum you used to purchase into the DAO pre-sale. Those coins are going to be unlocked in about 3 days on May the 28th. And the Ethereum price is already dropping. It's not a leap to suggest that there's going to be at least some capital outflow back to Bitcoin for this retracement opportunity, let's say. Those who have purchased Ether late, when the DAO was already rising, but shortly after the $7.36, are going to be definitely the highest urgency to get back out, so the DAO might be the way, but for many it's going to be the way to get wrecked. Number 2 would be the Bitcoin interest rate halving event. For those who don't know, the Bitcoin interest rate will halve in about 2 months. So that means it will go from roughly 3,600 new Bitcoins mined per day to 1,800. So in order to maintain the current price of $450, you're looking at only $810,000 instead of $1.62 million to be purchased in order to keep that price stable. Now, a lot of FUD is going around regarding the fear of network weakness if a lot of miners will turn off their machines due to gross unprofitability. You see, if the inflation rate halves, then so does their specific income. However, a recent hash rate spike brought us up to a processing rate new high. The new 14nm and planned 12nm ASIC chips do have a significant advantage in efficiencies, which, with a likely increase in Bitcoin price and a lower inflation rate, will keep the network secure over the time being. As long as the mining pool does not gain over 50% of the network hashing rate as a whole, as a group or pool, there shouldn't be any issues. You'll just have to put up with 15-minute transaction times for a period until the network adjusts their difficulty down to a more reasonable level. On the other hand, for those of us who actually have to pay for their electricity, without a price surge, miners will have to make a very difficult choice on whether or not they want to offload their miners as soon as they can to a market which is very likely to have a surplus during that period. On to something more speculative. Number 3 would be the Chinese economy. As of the 24th of May, the People's Republic of China had weakened their currency fix to 6.5693 yuan per dollar in the face of a trending US market. Now, this is the most devalued level it's held since 2011. With such a depreciation in the currency, there may be further interesting capital outflow vectors such as gold or Bitcoin. In fairness, however, each Chinese citizen can purchase up to $50,000 American worth of foreign assets a year, leaving this to be a less likely BTC fiat inflow route yet. However, watch out for speculator panic if this lifeline is cut. I digress. For my followers, my charts and all trades are public on my Twitter, so you can see how I do there. Don't forget to practice proper risk management on your trades either though. Be safe out there. Don't put 100% of your balance into a single trade, and don't forget to set your stop losses either. Thank you very much for watching, and cheers.